BNPL is great for retailers, offering a seamless way to boost sales and attract customers. It's a win-win for businesses looking to expand their reach and increase revenue. Welcome to our deep dive on Buy Now, Pay Later, or BNPL. Let's start with what it actually is and how it's reshaping the world of consumer finance. We'll explore its mechanics, benefits, and potential pitfalls. BNPL is a short-term loan that lets you split a purchase into smaller, fixed payments over a few weeks or months. Most plans are interest-free if you pay on time, but some may charge small service fees, so it's crucial to read the fine print. These fees can vary, so understanding the terms is key to avoiding unexpected costs. It's most popular for buying things like smartphones, electronics, or luxury clothing, items that are expensive but not out of reach. BNPL makes these purchases more accessible by spreading the cost over time, making budgeting easier. But remember, BNPL is still debt. It works a lot like other installment loans, such as car loans or mortgages, but usually for smaller amounts and shorter terms. Unlike traditional loans, BNPL often boasts a simpler application process and quicker approval times. Here's how it works. At checkout, you choose BNPL as your payment option. The BNPL provider pays the retailer in full, and you pay the provider back in installments. It's a convenient alternative to credit cards, especially for those who prefer fixed payment schedules. Usually, you make a small down payment, about 25% of the total. For example, a $1,000 purchase might require $250 upfront, with the rest split into equal payments. This initial payment reduces the overall debt and sets the stage for manageable future installments. Some providers, especially outside Saudi Arabia, may not require any upfront payment. Payments are often deducted automatically from your bank account or credit card. Setting up autopay ensures you never miss a payment, helping you avoid late fees and potential credit score damage. Not every purchase is eligible, and there are usually limits on how much you can borrow. These limits are based on various factors, including your credit history and income, ensuring responsible lending practices. How does BNPL affect your credit score? Most providers don't report your payments to credit bureaus, so paying on time won't boost your score. This means you won't get credit for your responsible repayment behavior. However, some providers do a soft credit check, which doesn't hurt your score. Others, like Klarna, may do a hard check, which can lower your score slightly. Understanding the type of credit check is crucial before proceeding with a BNPL transaction. If you miss payments, those can be reported to credit bureaus and even sent to collections, which can seriously damage your credit history. Late payments can trigger a cascade of negative consequences, impacting your ability to secure loans or credit in the future. The Consumer Financial Protection Bureau found that frequent BNPL users often have lower credit scores and annual incomes between $20,000 and $50,000. This suggests a correlation between BNPL usage and financial vulnerability, highlighting the need for caution. Let's break down the pros and cons of BNPL. Weighing these factors carefully will help you make informed decisions about whether BNPL is right for you. Pros: smaller, interest-free payments. You don't need a high credit score to qualify. The approval process is quick and easy. These advantages make BNPL an attractive option for many consumers seeking flexible payment solutions. Cons: late payments come with penalties and can lower your credit score. Returns and refunds can be complicated. There are fewer regulations and protections than with credit cards. These drawbacks underscore the importance of responsible usage and careful consideration. What about teens? Most BNPL providers require you to be at least 18 and have some credit history, so most teens can't use it directly. This age restriction aims to protect younger individuals from accumulating debt before they have the financial maturity to manage it. But it's important for parents to teach teens about the risks and responsibilities of BNPL. If a teen is eligible, parental guidance is a must. Open communication about financial matters can empower teens to make sound decisions and avoid potential pitfalls. Parents can even simulate BNPL by making a purchase and having their teen pay them back in installments without the risk of late fees or credit damage. This hands-on approach provides valuable learning experiences and fosters financial literacy. Why do merchants love BNPL? It helps them sell more by making expensive items seem affordable. BNPL companies earn money by charging retailers a fee for each sale. This fee is often a percentage of the purchase price, making BNPL a profitable partnership for both parties. In some countries, BNPL companies also make money by selling customer data for targeted advertising. This practice raises privacy concerns and highlights the need for transparency in data handling. BNPL reduces the pain of paying by breaking up big purchases into small, manageable amounts. This makes it easier to spend, even when you shouldn't. The psychological impact of smaller payments can lead to increased spending and potential debt accumulation. It taps into our desire for instant gratification, getting what we want now and worrying about payment later. This can lead to overspending, anxiety, and debt. Resisting the urge for immediate gratification is crucial for maintaining financial stability. Globally, about half of Americans use BNPL and a quarter of Belgians are in debt. In Saudi Arabia, 55% of shoppers use BNPL and 33% are registered with a provider. Most users are under 35. These statistics highlight the widespread adoption of BNPL and the potential risks associated with its usage, particularly among younger demographics. The Saudi government is working to promote saving and investment because a lack of financial discipline can threaten both personal and national stability. Encouraging responsible financial behavior is essential for building a strong and sustainable economy. The bottom line, don't buy what you can't afford. Differentiate between needs and wants, and don't compare yourself to others. Your self-worth isn't defined by what you own. Prioritizing essential needs over impulsive wants is a cornerstone of sound financial management. BNPL can be a useful tool if you use it wisely, but it can also be a trap. Stay disciplined, stay informed, and always think before you buy. Thoughtful decision-making and financial discipline are key to harnessing the benefits of BNPL while mitigating its risks. Used wisely, BNPL can be helpful, a tool for managing expenses and making purchases more accessible, but careless use leads to debt, creating a cycle of financial strain and anxiety, and financial stress. Understanding the potential consequences of irresponsible BNPL usage is crucial for making informed decisions. Stay informed, read the terms, ensuring you fully understand the obligations and potential fees associated with each BNPL agreement, and always prioritize your long-term financial health. Building a secure financial future requires careful planning, disciplined saving, and responsible borrowing habits.